Dear Federal Minister Dr. Müller, Your Excellencies, ladies and gentlemen, dear friends. It is a great honor and pleasure for me to welcome you all to this year's Africa-Europe Forum. More than 1,200 participants are right now taking part in our conference, which is already a big success for us. Africa has the potential to become the largest growth region in the world. With a growing middle class, a young population, and many investment projects, Africa offers diverse opportunities for international companies and institutions. The conference series Africa-Europe Forum offers a broad platform to promote strong dialogues between the economic partners of both continents. It will continue as an important meeting point for leading enterprises, top managers, SMEs, banks, financial institutions, governments, public sector, and other decision makers. The new school generation is young and educated. It can profit from digital leaders and efficient managers, African style. There are, among others, vast opportunities in high-tech, IT, artificial intelligence, resources, energy, and industries. Those active in this new world are already enjoying visible progress in public and personal welfare. Ladies and gentlemen, the conference taking place today and tomorrow will focus on three topics. Today, we will take a look at Africa dealing with the pandemic and the health system of Africa. Furthermore, we will discuss the chances and opportunities arising for Africa due to the digitalization. Tomorrow, we will already start at 9 a.m. and we will address the topic experiences with the German Development Corporation. Afterwards, we will discuss the issue hydrogen and the role of renewable energy in sub-Sahara Africa's power supply. The conference will end with the crucial topic, education and training. Before we start, please allow me to thank our knowledge partner, the International Finance Corporation, all our partners, the members of the steering committee, and of course, our sponsors. Now it's my great pleasure to announce the opening of the Africa-Europe Forum 2021 with a personal welcome address by Dr. Gerd Müller, the German Federal Minister for Economic Cooperation and Development. Thank you for your attention.
Dr. Maleki, ladies and gentlemen, dear guests, the COVID-19 pandemic has created challenges the world has never seen before. Worldwide, over 150 million people infected and 3.3 million dead. Collapsing health systems, supply chains interrupted, unemployment. 2/3 of infections are in poor countries, but only 10% of vaccinations. We must change that. The pandemic is a wake-up call for more sustainability, protection of resources, for solidarity and fair globalization, because human and animal health can only thrive in a healthy environment. Africa and Europe are neighbors and partners, and they need to tackle key issues for the world's future together, now. Climate and energy, food, digital technologies, climate and renewable energies. Africa has the potential to become the green continent of renewable energies. The BMZ Business Alliance on Energy is sharing knowledge, skills, and technology to create local value-added energy security and jobs in our partner countries, using the opportunities of digital technology. We need to create better links between politics, business startups, civil society, and research. Third, we need free trade, but especially fair trade. The African Free Trade Zone is a milestone, but only fair trade will enable major advances in development. Those advances will also benefit Europe and European companies. We need strong partners in the private sector. Our Marshall Plan with Africa creates incentives for reforms and investments. We are taking action. Our Development Investment Fund helps German and European companies to invest in Africa because they create good jobs and set high standards on quality, human rights, and sustainability. Support is also open to African companies, startups, and small and medium-sized companies. With our special initiative on training and job creation, we are joining with around 200 German, European, and African companies to boost training and jobs. Let us use this potential for recovering forward sustainably after COVID, for a Green Deal in Europe and with Africa, for a bright future on both our continents, and for fair globalization that benefits us all. Thank you so much.
Thank you, Dr. Müller. Having the Federal Minister for the welcome message is a great honor for us. Now it's my pleasure to hand over to Jan van Wilson, Country Manager of the International Finance Corporation for the countries Austria, Czech Republic, Germany, Hungary, Slovakia Republic, and Switzerland. Dear Jan, the floor is yours.
Thank you very much, Mr. Maleki. And a good morning, a good afternoon indeed to everybody. Very pleased to introduce Mr. Sergio Pimenta. Mr. Pimenta is in charge of all investments and advisory activities in the Middle East and Africa of IFC, which is the private sector arm of the World Bank Group. He joined the World Bank Group in 1996, coming from the French Ministry of Finance, and before that, BNP Paribas. And he has held various management positions at IFC, including as Vice President for East Asia and the Pacific, and as Global Head of Industries for Manufacturing, Agribusiness and Services worldwide. Mr. Pimenta is part of IFC's senior management team. Thank you very much, Mr. Pimenta, for joining us today. We are pleased to have you deliver a brief keynote address and also to join the forum's opening panel. The floor, or rather the screen, is yours.
Thank you very much, Jan, and good afternoon, good morning, everyone. Let me begin to thank our host, Dr. Maleki and Dr. Müller. It's a real great pleasure to be here with all of you today. Let me also welcome the distinguished panelists and guests to this very important discussion. As I mentioned, it's a great honor to be here with all of you. This gathering sends a really strong signal that together we can renew our efforts to bring businesses, governments, and development institutions together in partnership to support growth and job creation in Africa. Talking about African opportunities with European investors is more important now than ever. Short-term prospects for a quick recovery in Africa are conservatively modest, and we'll hear from our World Bank colleagues later on during the discussion. The World Bank foresees that Africa's GDP will only rebound by about 3% in 2021, following a contraction of the same magnitude in 2020. But I'm convinced that Africa's recovery from COVID-19 will be an opportunity to create a stronger, more resilient, and more connected continent. Joint support will be needed from investors, from development partners, and from others to work together with the region in deploying private sector solutions to recover, rebuild, and flourish economies across the African continent. Many of us here today are committed to do this. By 2030, IFC plans to double investments in Africa with a commitment to dedicate a large part of its investment in fragile and low-income countries. In partnership with the German government, we are also working to increase impact in the continent through the Compact for Africa. So we believe that it is possible to support the private sector to have an even greater impact, given the many opportunities for investment to create jobs and provide better and more affordable goods and services. But investors' perception here is critical. Along with discussing emerging opportunities, we think it's important to acknowledge and underline the strength and the resilience that African economies have shown during the pandemic. For example, through quick action, governments across Africa showed their strength, flexibility, and resilience to help keep COVID-19 infection levels lower than in many other parts of the world. We will discuss in this session and in the next one during this forum the opportunities for the private sector. These range from education and health to renewable energy to digitalization and many others. And we will discuss them together as investors, businesses, governments, and financial institutions. Collaboration is the key for success, and collective action of all stakeholders is needed to reverse the economic impact of COVID-19. IFC is here to help firms in Africa adopt the best business models, operational practices, and governance structures, to help governments put in place the reform needed to develop the best possible investment climate, and to help investors identify the right opportunities and to accompany them with relevant financial and advisory support. I very much look forward to the discussion, and I hope it will be the start of many projects that Africa needs and that can be successfully implemented. Thank you for your attention.
Thank you very much, Mr. Pimenta. That's very, very nice. Actually, we will have a chance to discuss some of the points that you have mentioned, and also the Minister Müller has mentioned, including at the first panel, indeed. So the topic of the first panel is COVID, Perspective Africa, Impact, from Impact to Opportunities. We have a distinguished panel, and in the discussion, I would like to concentrate on two themes. One, indeed, is, as mentioned, that despite COVID, or maybe even due to COVID, there are opportunities. And the second theme is then what is then needed to make those opportunities for the private sector a reality. So with us here today are, in addition to Mr. Pimenta, other panel members. We have Viviane Bakayuku. She is the Citibank's country manager for the Ivory Coast, as well as Citibank's global subsidiary group head for West and Central Africa. She joined Citibank 20 years ago, and in various roles in the region has gained extensive experience in Francophone, West and Central African's public sector, corporate and investment segment, the regulatory environment, and market dynamics. So thank you very much for joining us here today. Then we have Mr. Christoph Kannengieser. He's the CEO of Africa Verein for the past 9 years, Germany's most important business association for Africa. His career spans leading positions at other prestigious German organizations. This includes having been the CEO of Markenverband, Deputy Secretary General of the Konrad Adenauer Foundation, and Executive Director Labor Market at the Confederation of German Employers Associations, BDA. Mr. Kannengieser has been a founding member of the IZA Policy Fellows since 2005. Welcome as well. And then we have Mr. Albert Zerfak. He's the Chief Economist of the World Bank, the public sector arm of the World Bank Group, for Africa. Before his appointment to this position in 2016, he was practice manager in macroeconomics and fiscal management, and he had joined the World Bank in 1997, held several positions in Africa, East Asia and the Pacific, and Europe and Central Asia. Between 2008 and 2012, Mr. Zerfak was on leave from the World Bank as he was Director of Research and Investment Strategy, as well as Chief Economist of a Malaysian sovereign wealth funds. So thank you very much for joining us here. Let me start with you, Mr. Zerfak. The question is from where you sit, basically, as the economist. What do you see as the opportunities? What do you see as a perspective for Africa in the next 3 years? What kind of transformation is needed for that?
Thank you very much, Jan. Honorable Minister, Excellencies, distinguished panelists, good morning, good afternoon to all of you. It's indeed an honor and privilege for me to address you this morning at this extremely important forum. So, to your question, Jan, from the macroeconomic perspective, what do we see in the next 3 years, as you mentioned? I'll start by saying that Sub-Saharan Africa, just like the rest of the world, entered into a recession in 2020 due to the severe shock induced by COVID-19. But what is interesting is that the impact of COVID on the economic front, as well as in the health front, has been less severe than anticipated. In fact, we estimate that economic growth in the region has contracted by 2% in 2020. And that's the lower bound of our forecast range. Because a year ago, we were anticipating a contraction by up to 5%. So 2020, we saw a 2% recession in Africa, and that's certainly very bad, but it is better than anticipated. The other good news, Jan, is that the prospects for economic recovery are strengthening in Sub-Saharan Africa. We actually forecast that growth in the region could rise between 2.3 to 3.4% in 2021. So real GDP could grow between 3.1 and 4.5% if together we do the right thing. And here I'm alluding to the kind of policy reforms that Jan mentioned earlier. But before I get into the type of reform that would allow this to happen, it is important to note that economic growth in Sub-Saharan Africa is going to be multi-speed. Why? Because of how diverse our continent is. We will see a huge contraction in economies that are essentially led by tourism. And the small islands, such as Cabo Verde, such as the Seychelles and Mauritius and others, would actually experience a slower than expected recovery. Other economies that are more diversified, like Kenya, Cote d'Ivoire, Senegal, Ghana, may actually, power through these next 2 to 3 years, growing at above 5%. So it's going to be a multi-speed recovery, but the main issue, the main risk we see is our largest economies, the 3 largest economies in Sub-Saharan Africa, Nigeria, South Africa, and Angola, are still experiencing a very, very timid recovery, and barely growing at 2%, way below population growth. So in terms of per capita growth, in the next 2 to 3 years, we would have to really, intensify reforms, deepen reforms that would lead to better private investment if we are to sustain positive per capita growth. Now, if I could conclude by talking about, the kind of reforms that are needed, it would have to be reforms that lead to job creation in Africa, as Sergio has mentioned. And when it comes to job creation, we believe it's all about inclusive productivity growth, boosting productivity across sectors in African economies. And that would require three transformations: the digital transformation, the sectoral transformation that would allow African countries to build more and create more jobs in manufacturing, and the spatial transformation that would allow African countries to better connect to global value chains, but also exploit the Continental Free Trade Agreement to create more jobs, but linking also urban and rural areas. Let me stop here for now. Over to you, Jan.
Thank you very much, Albert. This is very useful. Let me go to Viviane Bakayuku. Based on what Albert just said, and from basically where you sit, on Citibank's point of view in West Africa, what do you see as, let's say, the business case for European companies in Africa?
Thank you. Thank you, Jan, and good morning, good afternoon, and good evening to all. To your question, Jan, it's really important to highlight that prior to the pandemic, Africa recorded a star economic performer, namely Senegal and Cote d'Ivoire, with the latter running at almost 10% growth for a decade, with Senegal close behind. We believe this high growth rate should return. If you consider Sub-Sahara Africa, for instance, you will see that this region has a range of commodities that are critical to our global industry. As an investor, you know that out of Sub-Sahara Africa, we have Francophone region, mainly the West and Central Africa Economic Monetary Zone, which have a currency pegged to the euro, which also afford a level of stability and predictability. So in this region, where we've been implemented from a city perspective over the past century, we see demand and credit and growth across several sectors. It does include the metal and mining, agriculture actually as well. We all know that food safety will always remain a priority for largest population. FMCG as well, I mean the fast-moving goods sector. Telecom sector also very important. Let me give you one example here. The mobile market generate an annual turnover close to 1.5 billion euro in Cote d'Ivoire, with a net profit up to 10% in some cases. We also have automotive industry and transport, let's say more broadly. Construction and energy, that has been said when we talk about or refer to infrastructure. What we also see is some opportunity in the financial sector, which actually we do operate. Recently, the latest and magic example that I can share is the Equity Bank purchased a majority stake in the local Congolese bank called BCDC, and then became the second largest bank in DRC, having successfully integrated ProCredit, which is a German bank, as you know, into their portfolio. Maybe last point, but which is a key one that I want to also highlight on, is that as the African consumer class increase, so do the investment opportunity. As per the recent study from the German corporation, we have 4 countries, South Africa, Nigeria, Kenya, and Tanzania, which concentrate 98% of the e-commerce and distribution market in Sub-Sahara. And from the same market analysis, the e-commerce industry is expected to reach $15 billion by 2022, which is less than 2 years down the line. So the African way of consumption has been strongly influenced by the digital. It has not been said enough. And another study or market analysis from McKinsey, and I like to mention that, confirm the potential of e-commerce that should represent 10% of retail business in the largest African economy. In Francophone West Africa, for instance, we have two major dominated the e-commerce and the distribution industry. Those are Glovo and Jumia. So it just speaks for itself, meaning that there is some potential. As an emerging market, we really believe at Citi that Africa has that potential, and this potential is huge opportunity in the ESG basically space, both for public and also the private sector investor. Certain governments are well on their way to issue green bonds. Some of them have already started, like the Kenya, while partnering with private sector investor, especially European, who have knowledge, expertise in the environmental space. We can take the simple example of Lekela, for instance, in Senegal, with the energy production, the electricity, but through the aeolian technology. So those are green energy. So Africa is really the untapped potential, rich natural resources, fast-growing population, increasing middle class, and expanding cities. The ambassador of Europe, based here in Côte d'Ivoire, Mr. Von Kirchmann, was recently promoting European investment in Côte d'Ivoire and refresh people's mind that regarding this strategic country, because we all know Côte d'Ivoire is driving 40% of the GDP growth of the West Monetary Africa region. So that country have 40% of its exports absorbed by Europe, and 1/3 of its importation come from Europe. And more importantly, the European really foreign direct investment represents 60% of this country, meaning 5.5 billion euro equivalent. I love saying one thing, Jan. Each time that we all drink a cup of tea, a cup of chocolate, a cup of coffee, you sort of travel to Ghana, to Kenya, to Côte d'Ivoire. Same when you also eat a tuna, for instance, because 100% of Côte d'Ivoire production, for instance, is exported to Europe. And each time that you pick up your phone, actually, you carry a piece also of DRC Congo with you, simply because they have an immense cobalt and copper reserve. However, and that's my last point on our experience, I agree that our continent could be high risk, definitely. But at the same time, it's high return. And besides, I would say that risk varies. So it's usually depending on sectors and country. So if you understand them, if you understand those risks and challenge, you can mitigate them against them. So that has been previously said, I think, but more important for us to insist on the fact that every government is aware of the needs to improve, I would say, the business environments, the governance, and they actively working on that jointly with the private sector to ensure, I would say, a more efficient market. So if you take the banking sector, and that's my very last point, across the region, what we do to overcome our challenge is to work really closely with the regulator and each country at each country level to ensure that international best practice are applied, and that we have a pragmatic approach basically that is adopted. So in a nutshell, our ability, I would say, to advise and guide clients through the evolving regulation in each market is a critical component of our work. So yes, we had COVID, but we also have opportunity. That's very important to insist on. Jane?
It's a very comprehensive summary, basically, of all kind of different points, but I think it's very well put. in terms of different sectors, where there are opportunities, but also what is needed, and particularly also the governance. I will come back to that later. Let me first turn to Mr. Kanagisa. The question is from the German perspective. We just heard Viviane talk about different sectors where there are opportunities from Citibank's point of view, including fast-moving consumer goods, foods, telecom, transport, construction, energy, financial sector even, digital, ESG. Are these sectors where you see interest from the German side? Or do you see more interest from the German side for the manufacturing? And Albert also referred to where he sees opportunities as well. So the question really is, where do you see opportunities from the European, German side for the coming few years into Africa? I think you are on mute.
Thank you very much, Jan, and good afternoon to everybody. It's a pleasure to contribute to this conference today and to this wonderful panel. Let me first of all emphasize on the fact that our impression on the micro level, organizing more than 500 German companies doing business in Africa, confirms what on the macro level has been pointed out by Mr. Zerfak. We see that Africa remains on the radar screen of German companies, and that the interest in the African continent is even increasing over the last couple of months due to the fact that globalization is changing, that we see how vulnerable our value chains are, that companies see much more the need to diversify value chains and also to diversify growth markets. And that's why we are relatively optimistic for Africa and for German business engagement on the African continent. So secondly, the question for the sectors. So it follows, of course, a bit the strengths of the German economy. And we are, of course, a country of manufacturers. But we are also a country of renewable energy. We are a country which is very strong in all kinds of technologies you need for the production of hydrogen, for green hydrogen in Africa. And we are, let's say, worldwide, the automotive country. And I see, first of all, a big interest of the German car manufacturers, namely Volkswagen and others, to invest much more in Africa. This investment is oriented towards local demand. And it is to give an answer to the rising demand of Africans, of African middle classes for mobility. So in this field, I think there is we will see important investments over the next couple of years. And I think this is a sector where Europe and namely Germany can really make a difference also in the field of job creation. So I would say automotive is important, then energy is important, but let me also focus on healthcare. Healthcare plays an important role for European companies who aim to invest in African countries. Not only in times of global pandemic, the pandemic has shown that current distribution and manufacturing capacities is insufficient to rapidly deliver vaccines or other critical health products to Africa and even to Europe. This is why building capacity to produce vaccines and other medical products in Africa is so important. To achieve greater independence, regional hubs for production facilities could be established. This requires sustainable partnerships with European companies and private investment. Together with European partners, African countries could build up a pharmaceutical industry and production facilities for medical goods and investment from abroad. And as you know, this sector in Germany is a very strong and important one. And I'm quite convinced that we will see much more engagement in this field over the next couple of years, also driven by the experience we made during this global pandemic. Let me close with that. There are, of course, other fields of interest as well, the food industry, packaging, and so forth. But I think these three, car industry, energy, including hydrogen, green hydrogen production, and healthcare, are key sectors for industrial investments over the years to come from Germany.
Thank you very much. Let me go back to Sergio Pimenta. Sergio, what we hear from the other speakers, I think everybody sees opportunities. We also hear opportunities in different sectors. Basically, I think many sectors are mentioned. Now, IFC, of course, is the largest private sector investor in emerging markets. What you hear, does IFC basically have the same priorities? Where do you see, what is IFC's action plan strategy with regard to opportunities and focus on the private sector in Africa? Does it resonate with what we just heard? Or are there different sectors what you have in mind?
Thank you very much, Jan. And I fully agree with the opportunities that we've heard the other panelists mention earlier in this discussion. Whether we like it or not, the pandemic does bring a certain number of opportunities. And I think what we need to look at is changes that this pandemic is bringing in the economies in Africa and in the livelihoods in Africa. And how do we adjust to that? And how do we support people so that they can regain growth, find employment and useful and interesting activities to do and so on. I see mostly, in addition to what has been said, I see two themes that are going to be very important in terms of the opportunities going forward. And one is all the theme around digital economy. What we've seen throughout the crisis is that actually there is a price to be unprepared. And some countries were probably more prepared than others. And I have to say that you all agree that in many countries in Africa, the sad precedent of Ebola had actually given a good level of preparation for countries to put in place systems that have been actually very effective in fighting the pandemic. But preparedness comes in many dimensions, whether it's on the financial preparedness, economic preparedness, and so on. And there you can see some different realities in different countries. But those countries that have already embraced the digital economy and had already started the moving towards a stronger leverage of innovative technology, actually managed to resist or be more resilient to this crisis. And there I see a lot of opportunities. I mean, we are working together with the World Bank on large initiatives to support digitalization of the African economies. And there's a certain number of interventions in the year. I don't want to go into too many details, but there's a lot that can be done and that we can do. But there, I think, is a big space where opportunities lie, whether it's on the infrastructure side, but also on the education side, on the usage of the digital economy. And we can see that actually it has been very successful in many countries to deploy that in a more accelerated fashion. The second area of opportunity that I see is very much linked to the bigger issue of climate change. Where when Africa is rebuilding itself after the crisis, I think it's an opportunity to rebuild better, to rebuild greener. And there is, and to some extent, it is linked also to the first point of digital economy, because a lot of it does mean using new technologies, using more environmentally friendly technologies, and rethinking a new normal and a new life that is going to be different from before the pandemic. So I see a lot of opportunities in terms of rebuilding or building the continent around green themes, whether it's around energy, but also around industrialization. I mean, Dr. Kiso was mentioning all the impact, for instance, of opportunities for German firms in a lot of industrial fields, including automotive. We can see that this can be done through a much more climate-friendly type of approaches, and this is something that we can see, and there's a lot of interesting technology in Germany and in other countries that can be used in Africa exactly under that theme. So you will see a lot of, I think, opportunities in that space, and as Africa will rebuild itself, I think you will see a shift both in the digital economy and on the climate change. And a last point I would mention, I don't want to be too long, but I think is absolutely crucial, especially when we talk about opportunities in Africa, that encompasses everything that I said before. I think is the role of women in the African economy. And when you look at the role of women in the formal economy in Africa, it's still behind many other regions. And there's a huge opportunity to help women access the workforce, contribute to the formal economy. Women are very active also in the informal economy. So if we help shift that informality to formality and leverage the potential of the African women, we will have fantastic results in Africa. And I'm very convinced of that.
Thank you for that. Let me, because indeed we make sort of the transition, we hear a lot of opportunities. I think we sort of made the transition to the second theme is, what is really needed for this. And let me start with you again, Albert. So what is really needed from your point of view as an economist from the World Bank side for the continent, on what needs to be put in place to, how can the private sector really contribute to the recovery? And we heard issues like governance, we heard the investment climate, business enabling environment. So all these opportunities, be it in energy, be it in telecom, be it in the other sectors, automotive, etc. So from where you sit, what is needed, and how would we get there? Is there a willingness from both sides, being the investor side, but also, let's say, the African side, to make, let's say, reforms, to do what is needed?
Thank you very much, Jan. I think it's quite clear from my perspective that COVID has actually exposed a lot of vulnerabilities across the world, right? We've seen health systems struggling across the world. We have seen economies struggling across the world. COVID has exposed a lot of these vulnerabilities. And in Africa, beyond the macro vulnerabilities, some of which were already there before COVID, at the sectoral level, one thing that came up quite clearly is the role of the right kind of infrastructure. And here I'm referring to energy. And energy, as most speakers have mentioned, should be taught moving forward as really combining all sources of generation, especially green generation, and this has been discussed here. So there's going to be no private sector development in Africa without energy, and that has to be absolutely clear. Today, we still have 6 out of 10 Africans living without electricity. This is terrible. And in some countries, less than 15% of the population have access to electricity. We cannot develop the private sector without a reliable and affordable energy sector. Some see this as a constraint. I see this as a business opportunity. And I think to the theme of this conference, my sense is we should change mindset Instead of looking at Africa in terms of constraints to investment, constraints to private sector, let's look at it as opportunities for businesses, small and large, from across the world, but also from Africa. So that's the first point I wanted to make. The second, Jan, is that during the COVID crisis, Africa has actually shown that, it can take advantage of this crisis, didn't waste the opportunity of this crisis, and expanded its digital access and use. Our latest publication, the Africa's Pulse, is clearly highlighting that African firms increased their use of digital technologies and solutions, and increased their use of e-commerce. And a platform like Jumia that Mrs. Bakayoko mentioned earlier, Jumia increased its transaction by more than 50% just in the first 6 months of 2020. So e-commerce is certainly going to be a booming area, a booming sector of activity in Africa. And again, I'm talking about this, I'm referring to these opportunities before talking about policies. And here, I think what is going to be critical in terms of reform, is the regulatory framework. And this is on African countries. In West Africa, for example, internet remains one of the most expensive and the most unreliable across Africa and across the world. I see that as business opportunities. So governments need to improve the regulatory framework for better private sector investment to really, boost the digital economy, which is proving to be critical for the future of work in Africa. So that's a key area of reform that I definitely see. The second area that I'm going to be discussing is, manufacturing and industrialization that were mentioned by, Dr. Kamingisa and Sergio. I think it's important to see it in I would say in two areas. One is really, exploiting Africa's comparative advantage in minerals that are, critical to the green economy moving forward. And starting to think of manufacturing those green products for the world. I don't see why the battery industry, for example, cannot actually locate in Africa. Why can't we make our countries, the green factory of the world? I think that to me is certainly, a great opportunity. Most of the people mentioned on this panel, but we need to create the right framework for that to happen. Next area when it comes to industrialization is adding value to Africa's commodities, especially agricultural commodities. So, agri-processing is a huge opportunity in Africa, not only to feed Africa, but potentially to feed the world. But complementary investment needs to be made, including in packaging. My experience working in East Asia is that agri-processing goes with packaging. And that's certainly an area where we should be investing more, and governments and private sector needs to collaborate to achieve better results. Third area that I'm going to mention, we haven't discussed that here. A huge business opportunity in Africa, I see, is urbanization. African cities, most of them remain extremely congested and costly, and therefore reducing productivity of workers and firms. Investing in public transportation, investing in housing, investing in what makes cities livable, including harnessing the digital technologies to make cities more functional and more livable in Africa, it's going to be opening a huge area of investment that hasn't been tapped yet. But for that, government again needs to improve the investment climate for sure, improve governance, and governance is going to be key. And when I say governance here, I would actually limit that, bring it to the level of public investment management. How do we select projects? How do we implement them? How do we monitor implementation of these projects? To me, these are areas where we need to really focus. So in summary, Jan, I think African countries are positioned to really harness investment from the world to create jobs for its youth. But to do that, we need to be making the right kind of reforms. We need to be making the right kind of investment. We need to make the reform that improve the human capital, investing in skills, investing in education, and Germany can help, especially on the skills provision side for manufacturing. African countries need to really do the kind of reforms that liberate the potential for youth and women that has been mentioned. And African countries need to work with the private sector to address all the infrastructure constraints which I see as business opportunity. Let me stop here. Thank you.
Thank you very much, Albert. It's clear, basically, the position that you have for the past number of years, where you look about the continent and what is needed. There's one point that you haven't mentioned. It doesn't mean that you don't think it is important, but let me go to Viviane on this one, that is access to finance. What do you see from, let's say, Citibank's point of view for companies to get financing for their investments? So to phrase the question differently, what needs to be in place for Citibank to be even more active than you are at the moment? What will increase access to finance?
Thank you once more, Hen. It's important that I come back on one point, which is related to our mission in Africa and based on our long-term presence. It is simply to enable growth and economic progress and to help also companies, government, and investor embrace opportunity in Africa. What you need to know from my experience is that to our global clients, we are the local bank. And for our local clients, we are the global bank. From a footprint standpoint, we are unique, simply because we do operate across 16 presence countries where we are, and more than that, the non-presence one, above 20 countries, where we serve our clients, I would say corporate and investment, through that corporate and investment banking service to our clients.
I'm sorry to interrupt you, Viviane, but I'm conscious of the time.
Sure.
And I would like to quickly give you
no problem. So coming back on the point, but it was important for me to frame that so that people understand really what are the backbone of that experience from a financing standpoint. So in terms of financing, there is an increasing tendency regarding innovative financing solutions, which are blended. So it could be direct lending from a commercial bank, working capital financing, revolving credit facility, supplier chain finance, traditional syndication or syndicated transactions, structured trade finance with risk defeasance on the back of export credit agency support, etc., and even IFC as well. Usually, long-term financing goes up to 5 years, and the capital markets is really the bridge for longer tenor, which is also a regional source of financing. So it's an alternative when it comes to long-term financing. So we've been able with government really to build out financing regarding hard and soft infrastructure by tapping into the international capital market. I think international investors are now familiar with the investment narrative of African sovereign. And with that, we think that what is really important at this point of time is the need to deepen and broaden the secondary markets. So I will leave the aim and the goals or the objective around that. But one thing that I wanted to highlight here is to simplify the complex regional market structure versus a fragmented and different tax regime. So with that, we all agree in the financial sector that we need to develop one thing, which is related to the equity market. We don't have enough engagement, we don't have enough commitment, and not enough, let's say, contribution in that regard. Some of our clients understand very well the need to build a credit story by mitigating risk, from political to, I would say, financial, regulatory, legal, or any risk inherent to the industry where they operate, and this will always remain critical. So 2 examples, if I want to leave you with that.
Sorry, I'm very rude. No, I'm afraid we have a few minutes left. The time's getting
no problem. But I think that the audience needs to understand that we don't have capacity issue, and in Africa we have transactions that are 115 million euro size. We have large ticket transactions, so it's not a problem to be funded locally. It's important for them to know that we have those capabilities, and it's all about having the right partner, banking on the financial side, has a trusted advisor. So I'll pause there.
Thank you very much. Mr. Kanagisa, based on what you heard, any points that spring to your mind to add to what Mr. Zerfak and Ms. Bakayoko mentioned in terms of what is needed for, let's say, German companies to be more active?
Yeah, I can try to make it short and maybe a bit provocative. First of all, when you look at the public sector in Europe and elsewhere here in Germany, I would very much recommend to spend much less ODA and to do much more in mitigating risk for private capital to flow to Africa, relatively simply. But to also have tailor-made risk mitigation tools for different sectors, because there is not the one-size-fits-all solution. The energy sector needs other kind of risk mitigation and financing tools and instruments than, for instance, investors in the manufacturing sector. And of course, trade financing is also an important issue when it comes to projects. Risk mitigation should also take place in the field of project development, because we have to fill up the project pipeline. We need more bankable projects. We are telling this for decades, and we don't see really appropriated instruments to make it less risky and more attractive for project developers from Europe and Germany to develop projects in the field of infrastructure and energy. So this is, I think, an important step which has to be done in Germany, in Europe, and elsewhere in the world if we want to make the African growth story a story of job creation, of cooperation, of partnership, and if we want to accelerate this development. And on the African side, of course, a lot of points have already been mentioned, but I think the most important one for more trade and namely for more investment is market integration. And that's why the project of having a Pan-African free trade area is so important. And I think we, in Africa, but also in Europe, we should do what we can to make this project a success story, but also to overcome the old way of how Europe deals with Africa in this post-Cotonou development aid framework. We need a common free trade area, Europe and Africa, and this will stimulate investment much more than anything we do in the field of development aid. So trade instead of aid, risk mitigation instead of aid, and market integration on the African continent. I think these are the main key reform needs over the next couple of years.
Great, excellent. Yeah, I'm sorry. I mean, the time is flying. I think we have we've touched upon I think many interesting aspects. So I'm confident that this opening panel sets a tone for the rest of the forum. I would like to thank the distinguished guests, panel members, for indeed a contribution. We do hear a lot of optimism, we do hear opportunities, but clearly also mentioning what needs to be in place. So it is indeed a going concern. Africa is a continent that will grow hardest, fastest of all continents, so that alone will give, of course, tremendous opportunities. I'm afraid we will need to close here, but thank you very much indeed, and enjoy the rest of the forum. Thank you. Back to you, Mr.
Thank you
very much.
Good afternoon to all conference participants and a very warm welcome to the audience. This session is called Digitalization in Africa, the Next Growth Engine. And my name is Christian Lindfeld. I'm a managing partner at Africa Advisors, and I'm responsible for the Africa Corridor at the German Startup Association. I'm very honored today to moderate this panel on such an important topic as digitalization in Africa. And before I start, I'd like to introduce the panelists. All seasoned experts, and I'm glad that we were able to bring them together for this panel, together with the Maleki Group and the IFC. Today in the panel, we do have Nitin Gajria from South Africa. Nitin is a managing director for Sub-Saharan Africa at Google. Nitin is a technology enthusiast with huge international experience. He spends his time working out how to make the internet more helpful for Africa and how technology can be an enabler for amazing things in Africa. Welcome, Nitin, to the panel. We have Jihan Abbas from Kenya. Jihan is founder and CEO at Lami, a B2B2C insurance as a service platform and API. She is very keen on changing the insurance sector in Africa through digitalization, and she represents the growing community of digital entrepreneurs in Africa. Welcome, Jihan, to this panel. We have Karen Adi from Nigeria. Karen is a director and leads the merchant services at Trade Depot, a factory to retail distributor for consumer goods companies. She's an expert in the finance technology and financial service industry with international experience. Welcome, Karen. And we do have Wale Ayeni from Washington. Wale is the acting manager for disruptive technologies and venture capital investments at IFC in Washington. He has over 18 years of global technology experience, spanning several roles, including microprocessor and chip design, product development, entrepreneurship, and venture capital. Welcome, Wale, to this panel. It's a great pleasure for me to moderate this panel on such an important topic. Digitalization in Africa is currently something which is discussed amongst a lot of experts. And in contrast to other topics in Africa, discussions around digitalization are mostly positive. And people immediately start to talk about opportunities, growth, digital natives, and job creation. And in fact, a lot has happened in Africa in the field of digitalization. New business models have emerged from fintech, education tech, mobility, but also healthcare. And even during the pandemic of COVID-19, the digitalization in Africa was a very important angle to help to fight the pandemic. Startup and innovation hubs have been founded, and more people have access to the internet via mobile devices. It is not uncommon to hear that Africa is becoming a mobile continent that through digitalization leapfrogs into the 21st century. We also heard in the previous panel that there are many sectors with huge opportunities. And in this panel, we want to unpack the role of digitalization for Africa to become a growth engine. But let's go and take a closer look into more details and these opportunities. So over to our experts. Nitin, if I may start with you. You compiled last year a study together with the IFC on the African digital opportunity. It was called Economy Africa 2020. So please tell us a little bit more about the findings and the outcome of the study. And please let us know what Google is currently doing around digitalization in Africa. What are your activities in that field? Over to you, and thanks again for being on the panel.
Thanks so much. Thanks for the question, and thanks for having me. It's a delight to be here. I'm going to start with a quick disclaimer, if you will. I'm a newbie on the continent. I've been on the continent. I've been living in Africa for now coming up to 2 years. So I don't claim to be an expert on the continent, but I'm happy to sort of share with you some of the observations that we've had in the recent past. So, like you said, we released a report together with the IFC, which really intended to capture the state of play, as it were, around the digital economy on the continent. Now, when I first moved to Johannesburg, when I first made Johannesburg home, as someone who's interested in technology and what's happening in the startup ecosystem around the world, I started sort of meeting a bunch of people. I started asking plenty of questions, and one of the things that really struck me was how much of a need there was for more data, more information, more projections around what the internet economy looked like. And that's when we partnered with Wale and his team at the IFC to release this report. Now, what this report does is that it creates sort of a starting point on what the internet economy in Africa looks like today. It's just in terms of size, it's roughly $110 billion as it currently stands. And what we're really projecting in the report is there is the potential for the internet economy to be worth $180 billion by 2025, which is around the corner, and then projecting further out in the course of by 2050, getting to over $700 billion. Now that's significant value added to economies around Africa. What we also looked at was we started looking at specific sectors within the internet economy, and what clearly popped up, and this probably won't be very surprising, but what really popped up were fintech, e-commerce, and health tech. In particular, fintech is something that we've seen a lot of momentum in. Fintech is a very, very broad term, but we've seen a lot of momentum in that space over the last few years. If you look at where venture capital has been going, about half of venture capital deployed in the continent has been going into fintech. So that's been really exciting to see. And this sort of is on the back of the incredible innovation and progress that we have seen in the mobile payments ecosystem on the continent. This is by far the most advanced mobile payments ecosystem that you'll find anywhere in the world in terms of number of active accounts, in terms of number of active players, in terms of amount of money transacted through mobile money. E-commerce, relatively nascent stages, but we're starting to see a huge amount of momentum in e-commerce, and likewise with health tech. What we also looked at was talking about venture capital. We looked at the venture capital ecosystem and where we are today. Now, if you look at the year 2020, there was roughly $1.4 billion of venture capital that was deployed on the continent. At a very in that similar period, in the year 2020, if you look at India, and I use India as an example because of similar-ish size of population, similar-ish GDP per capita numbers. Now, obviously, there's stark differences, one country versus 54 different countries, and a bunch of other differences. But just for the sake of comparison, in India, in the same period of time, there was about $13-14 billion of venture capital that was deployed. So it just sort of goes to show you what kind of headroom exists here on the continent. And the last point I'll make, the last highlight I'll share with you from the report is really a look into the developer ecosystem. No startup ecosystem in the world can survive without a really healthy developer ecosystem. And one of the things that I think this report started to do, and I think there's a long way to go for us to be able to do that, is it busted the myth that developer talent does not exist in Africa. We now know that there are about 700,000 professional developers on the continent. We have a reasonable idea of, we know where they are. We have a reasonable idea of what their expertise is, what they're doing, what they're working on. And this also sort of gives some additional information, some new tools to policymakers to start charting out how we continue to grow that developer ecosystem. So that's another important highlight. What's also fascinating about the developer ecosystem piece that this report threw up was that out of the 700,000 developers we have on the continent, about a third of them are self-taught, which again then goes on to underscore the level of hustle, the level of eagerness to learn, the level of access, the eagerness to get access to opportunity that exists on the continent. So now if we put the right structures around this, if we put the right support underneath this ecosystem, I think the sky is the limit. So really excited that we were able to partner to bring this report out, and I hope we're going to be able to make this a more regular affair moving forward.
Thanks so much. I mean, that sounds like everyone who is interested in digitalization in Africa has to read your report to get the latest facts. So thanks for that introduction statement.
Absolutely, you can just Google it.
Perfect. Over to you, Jihan. Jihan, you founded LAMI over 2 years ago, and your company wants to change the insurance market through digitalization. That sounds interesting and like an exciting journey. So please tell us a little bit more about your company, your business model, and the opportunities related to your services in the insurance sector. Over to you.
Thank you so much, Christian. Yeah, so I think when you look at the insurance ecosystem, it's one that doesn't really change as quickly as the banking sector, for example. When I was looking into the insurance sector, what was shocking was the fact that across Africa, less than 3% of people have access to insurance products, buy insurance products, or even understand what insurance products really are. When you look at that 3% penetration level, it's actually valued at $60 billion annually in gross written premiums. So the opportunity there is actually substantial. So the things that the gaps that we're trying to bridge with LAMI, the issues seem twofold. The first being the insurance products were not really being distributed in the right way. And then secondly, there was no technological infrastructure to facilitate the easy distribution of insurance products. So LAMI tries to bridge those two gaps. And what we are is we're an insurance as a service platform and API. We've worked to digitize the whole value chain of insurance. So the KYC, pricing, underwriting, claims processing, identity management, and so many more components, all in a platform and API that anyone can use to create, distribute, or embed any kind of insurance product and sell it at any point of sale. I think one of the key things for us was that we didn't want to really focus on a specific segment or specific product because it seemed that the problem was very broad, and we needed to have a solution that could cater for the entire sort of value chain of insurance and the whole spectrum of products. So we offer products that are like as little as 10 US cents all the way up to thousands of dollars through our insurance API. And I think for us, we focus on two main segments, the first being banks. We realized actually that, the banking industry across Africa has the whole process is mostly digitized except the insurance part of the bank. So you end up going to buy your insurance and you're asked, what your name is, what your ID number is, and you might have been banking with the same bank for 20 years, So we wanted to firstly create a way for, the banking industry to evolve and to have that, to be able to leverage on the data that they have to actually sell the right products at the right time to customers. And then we also focus on digital platforms. So these are like platforms that want to embed insurance products, maybe to monetize their customer base further, or maybe because they want to use it as a retention tool, for example, or even they might sell goods and services that insurance is complementary to, and embedding insurance with our API would be an easy way for them to sort of plug that in without having to think about the complexities of insurance. So our main aim is to provide a safety net and also at the same time, make it as simple as possible for anybody to launch insurance products in the shortest amount of time possible.
Thanks a lot for that really exciting introduction. I mean, hearing that just 3% have access to insurance products and using these insurance products, I think you are defining the market at an early stage. It's not a major market, so you're very early in that market, huge growth potential. So how is the competition in that market at the moment?
There's companies that offer digital insurance, but they're very much focused on specific products, specific segments, perhaps. We see a lot around microinsurance and distribution through telcos. There's companies like Microinsure that have been there for about 10 years or more. But really what we wanted to do was create a whole ecosystem, so to cater to the whole value chain and create a one-stop shop. So using our API becomes a single access point to an entire ecosystem of insurance. I think right now we're integrated with about 25 insurance companies that operate in East Africa, and we have distribution partners that range from banks all the way to various kinds of digital platforms that wanted a way to simply launch digital insurance products.
Wow, that's really impressive. So the insurance sector already a sector where digitalization plays a major role and will also be the enabler for much more growth. Coming to another sector, the retail sector, Karen, over to you. You work for Trade Depot, and Trade Depot wants to simplify retail distribution through digitalization. So also some kind of disruption through technology. Could you please tell us a little bit more about Trade Depot, how you disrupt the market, and what benefits are there for the producers, but also the retailers and the shops? Over to you.
Thank you, Christian. So Trade Depot is a distribution platform that connects the world's top consumer goods companies directly to informal retailers. So we make food and consumer goods supplies available, accessible, and affordable by providing access to credit and other financial services through this e-commerce platform. And on this platform, we digitize everything across the entire value chain. So the orders, the payments, and the logistics delivery are handled by us. And in order for us to have built this, we aggregate a lot of data points around the retailers' businesses. The problems that we were really looking to solve as a business when we started out were, firstly, there's a fragmented supply chain in consumer goods and retail in Africa. So the retailers and the manufacturers struggle with having accurate data that informs their business. So on the one hand, bringing this platform and being able to aggregate this data is solving problems for those two parties. For the producers and multinationals, it's giving them the ability to see down to a unit basis almost by product type, where their goods move from the factories all the way down to the retailers and often to even the end consumers, right? So they have an idea of pricing. They also have an idea of demand, and they can plan accordingly. And then for the retailers, what we found is a lot of these retailers are cash constrained because they're really we classify them as being in the informal sector. We have about 50 to 60,000 active retailers currently that we've been servicing for the past 3 years. And before coming up with these financial services, what you'd find is their purchasing behavior, they typically place smaller but repetitive orders. So you can have someone placing an order for a basket of goods worth $100 up to 14 times a month, right? And that just shows you that they're turning over really quickly, but they have limited stock. If they had enough working capital, then they'd be able to stock up on more fast-moving goods, and they'd be able to prevent the loss of potential sales, right? So that was what informed the inventory financing product that we have now, which is our first financial service offering, really. So we offer this short-term working capital loans to our captive audience of retailers, and they're typically marginalized or priced out of the traditional financial institutions or financial products that are out there, because they don't have, most often, in most cases, they don't have historical credits data. So it's very difficult to underwrite it. So that puts us in the best position to be able to underwrite, because we have transactional history for them going back for as long as they've been in business with us. And we also have loan repayment history where they've been on our inventory financing program before. And the nature of this offering is non-cash loans. So we're able to leverage technology in that we add we have a virtual store of value that is unique to each retailer, like a digital wallet. And so we apply credits to this wallet that they can then use to supplement their next purchase. And we do, these offerings range from between $200 to $1,200. And what we find is around the $600 mark or $700, retailers are able to even add an additional outlet or storefront to their business. They're able to hire more staff, and they're able to grow their business.
That all sounds to me that there's already a lot of disruption in the market happening through Trade Depot. Thanks a lot for these details. Over to Wale. Wale, I think you must have enjoyed all these disruptions happening through digitalization as a person who has been since years in the technology sector. Please tell us a little bit more about the support you are giving from an IFC perspective, where you promote digitalization in Africa, and yeah, what kind of opportunities you see besides the insurance sector or the retail sector. Over to you.
Thanks, Kristen, and thanks for the introduction, and thanks for the organizers for the invitation here as well. And I think just as a background of kind of what the IFC is and kind of what the venture capital group is, we're kind of a smaller group within the organization. And really our remit, our mandate is to invest in technologies in frontier markets, whether that's Africa, Middle East, Latin America, India, or China. We've been doing that for about 16 odd years now. We have a portfolio of about 1.2 billion, and we typically deploy about $150 to $200 million annually into tech in all the spaces. What's quite interesting is kind of over the last few years is just to see the phenomenal growth in kind of what I call more for frontier markets. So that's Africa, Middle East, and Southeast Asia as well. And when we narrow it down to Africa as in particular, it's kind of quite exciting to actually see and watch. I was telling somebody the other day that if you've been invested in tech in Africa long enough, about 8 to 10 years ago, you draw a landscape, and the landscape is what you do in venture capital, where you put like each sector, fintech, e-commerce, health tech, ed tech, and see who's playing and where. You could fit everything into kind of 1 or 2 slides, right? Fast forward 10 years, where we are now. I mean, just the number of opportunities and the number of startups on the continent, it's amazing to see. You can't actually create, it's not easy to create a landscape now anymore. You just need a lot of slides to get all of the startups in there. And what is most encouraging in kind of our business is that our business, kind of the raw material for tech investing is actually entrepreneurs. Without entrepreneurs, we don't really have a business. And I think what is really championing and pushing the Africa digital agenda is kind of the entrepreneurs, is the people that have decided to either go to Africa, from Africa, or return to Africa, as deciding to use technology to solve a bunch of issues that they see. And just the adoption of kind of that technology from the consumer is also there to see. So we've seen a bunch of startups being able to scale. And I do think that we've seen a bunch of exits along the way as well. And I do think, just from an African perspective, the promise about the opportunity is actually real. I think we will see bigger and bigger African champions, regional champions around tech. Because at the end of the day, if you can use technology to lower the unit economics of servicing a consumer, whether that's in health tech or whether that's in financial services, whether that's insurance, whether that's retail, there's nothing just growth. Because at the end of the day, the continent is one of the most price-sensitive continents. And so if you can use technology to start reducing costs, I just think that the opportunity to scale is actually quite there. So thank you.
Thanks a lot. That rounds up that first round of intro statements. I would like to come back to you, Nitin. You mentioned a very interesting point. You said we know exactly where the developers are in Africa. So I assume, as Google and driving a lot of initiatives on the continent, do you find the relevant talents for driving digitalization in Africa, or do you still see a gap in areas where talent is needed?
Well, the simple answer to that is this is a continent of 1.3 billion people. Anyone that says that talent doesn't exist on the continent needs a bit of a reality check, in my opinion. Having said that, I think there's a tremendous amount of room for depth in the technology sector. And what I mean by that is, yes, we have 700,000 developers on the continent, which is a sizable base to start off with. But when you compare the number of developers per million of population, let's say, compared to the US or other countries around the world, there is still a tremendous amount of headroom. So there's a lot of work needed to continue to build depth in terms of tech talent. Now, some of the things that we're doing on that front is we've had sort of a long-standing relationship with developers on the continent. We've played a role in helping developers get a leg up, training a pretty large number of developers every year. In fact, a couple of weeks ago, we announced a new set of 40,000 scholarships for future developers right here on the continent. So I think there's a role to play for the entire ecosystem to continue developing that pool of talent. But again, going back to the point I made earlier, out of 700,000 developers, a third of them are self-taught. So anyone that points to a lack of talent on the continent, I think is being a little bit short-sighted.
Yeah, fully share that observation. Maybe Jihan, I mean, founding a business in Kenya, a lot of people talk about the Silicon Savannah in Kenya. How hard was it for you to find the right people for your business from a developer side, but also from the business side?
Yeah, no, I think there's definitely a lot of really strong talent. The main issue is that because a lot of companies, like Microsoft, have their regional hubs in Kenya, it drives up the price of very good quality engineers. And I think that's the key problem that we're facing as a startup, is that you're not able to compete with companies like Microsoft or Google that might be paying a lot more than you can at that point. So I think that's the key issue. And for us, what we were able to do is I think one thing that COVID was really helpful with was it helped us start looking for talent, in other markets. So we're able to find more affordable talent for now in other markets. But I think as we continue to grow, I hope that we'll be able to get more local talent, also train a lot more younger developers, so that we can help actually increase that pool.
Okay, sounds interesting. You just mentioned Silicon Savannah, and we've seen from Kenya a lot of developments, like from fintech, peer-to-peer payment. So there is really a hub, and it's growing. It's also attracting a lot of young people and entrepreneurs. So what can we expect from Kenya in the next few years? What kind of opportunities, what kind of sectors do you see at an early stage, but with a promising outlook in Kenya?
I think it's a really exciting time around like fintech, savings and investments as well. We're seeing a lot of interesting and really cool startups coming up from here. I think, since the success of M-Pesa, a lot of people have been trying to see, what's the next big thing that can come out of Kenya. So I think we're seeing a lot of really interesting startups. I think also around the logistics sector, it's been growing substantially. A lot of interesting companies coming out of here. I think I have to mention the insurance sector, I think, because it's where I operate in. I think it's also quite exciting. Finally, I think we're seeing a lot of really strong growth, which for a long time was only to me. I was only probably one of the few people really excited about it, but now I think a lot more people are starting to see that it's a growing sector, which is great.
I mean, I think we are all looking forward to see what's coming up and what's coming from Kenya. But maybe let's go a little bit more to the west, and because Lagos is also a hub for entrepreneurs. We've seen a lot of also foreign investors investing into startups and entrepreneurs in Lagos. Karen, you also worked international and in Europe. How would you describe the current startup tech ecosystem in Lagos, also maybe compared to the European one?
Yeah, that's a really pertinent question, Christian. So I think I've been back in Nigeria for just going on 5 years now. And in the space of those 5 years, there's been rapid growth in the startup space. I remember at the time, which was 2016, digital lending or consumer lending was still really new. There were some first movers who were trying to bring the product alive, because a lot of competitors and the space at the time was manual. It was bricks and mortar. You had to go in and fill a form. But now it's like fintech has taken over, if you like, in terms of raising capital, in terms of even product development, in terms of engineering capabilities as well. You have the best developers moving towards the fintech spaces the fintech companies, over here. So I'd say in contrast to Europe, for instance, we're still, even with the rapid pace of growth and adoption and all that, it's still really early days. I think we're just at the frontier. We haven't really, there's still opportunities for maturity in terms of, across board really, in terms of product development, in terms of the variety or robustness of the offerings that startups have. I think we're still a bit limited in that there are lots of similar offerings from a number of different startups, as opposed to more robust. For instance, like insurance, like Jihan was referring to. We're still very early stage here. There's still more traditional insurance companies are still leading the fort in terms of insurance. So that's definitely an opportunity. Where if you were to contrast how prevalent that is here in Nigeria versus Europe, it's still early days. There are obviously many other industries where I'm expecting significant growth as well. There's health tech as well. There are a few startups in Nigeria doing health tech that have just come up and look like would be very relevant over the next few years. So yeah, it's very early days. I think I'd say I like the fact that at different levels, a lot of people are becoming more aware. There's still this notion that at the informal level, the adoption rate is very low. I mean, yes and no, really, because you have a lot of smartphone penetration that has gone into the informal sector, but there's still opportunities for them to be more aware in terms of product offering in that sense. So yeah, it's exciting times.
Definitely exciting times. Lagos as a hub also for established companies, big companies, but then on the other side, startups, young entrepreneurs. Is there an ecosystem where there are synergies, where you're working already together to disrupt various sectors? Is that something you see increasing now, also for the benefit of economic growth for the country?
So I say people are still, in a sense, converging in terms of the ecosystem, but only for specific sectors. There's definitely more convergence in terms of fintech, like I mentioned, and maybe that's because generally fintech has been in a boom over the last few years worldwide, and that's also what is attracting venture capital. What I'd say, or what we'd like to see, is more convergence in different sectors, or applying tech and digitalization to other sectors as well. There's still many opportunities in terms of economic improvement and I guess societal benefits that could be applied, but we're not necessarily taking advantage of yet. So I mean, yeah.
Okay. Sounds good. You also just mentioned again venture capital. I think Vale, we heard from Nitin at the beginning around the study you put together last year, and I think also one key finding was that for Africa the venture capital market was at a high in 2019. So definitely venture capital is one of the driving cornerstones for tech investments, for growing young startups. But besides venture capital, what do you see also from an IFC perspective in regards to financing entrepreneurs on the continent to really drive that growth? Or just venture capital who has that power to do so?
Yeah, no, thanks for the question. And given what people have said, it looks like every day I wake up, there's another fintech company in Lagos that just got money. So it looks like it's definitely I keep telling founders, can we do something else beyond fintech? But they complain that that's where all the money is, so that's what they're doing. But I do think there are a bunch of things that need to be financed on the continent. Obviously, there are layers to it. I think the initial thing is connectivity. People need to come online first. And then once you start doing things like KYC and financial services, it just keeps broadening the pie. And that's kind of the thing I like and I'm encouraged about digital. I know people want to say one sector or the other. I just actually think it's a lot more broad-based transformation that is going on the continent right now, because people are getting connected, they're getting to transact online. And once that starts to happen, there's just a bunch of other things that you can put on top of that. But to your question, venture capital is very important for financing. And although 2019 was a high, I do feel like when you do it on a per capita basis or as a percentage of GDP, the amount of venture capital going into Africa is still quite low. So there's still room for growth and more money needs to be invested in kind of equity and risk-taking venture capital. But beyond that, a huge component of growth is also what I call debt facilities that are available to startup companies. You know, you talk to a bunch of companies on the continent, a lot of them are struggling with working capital issues. You can, slice and dice it, you can call it, one financing or the other, but at the end of the day, most of these platforms have working capital issues. So structures or things like venture debt that is very prevalent in the US and other places is actually non-existent on the continent yet. And the difference between venture debt and pure debt is that venture debt is geared towards startups, understands how to structure these things just given their risk profile, versus collecting the debt from a bank that wants kind of more established businesses. So I think it's starting to show up slowly, but I do think that there's still a huge gap for venture debt to actually come into the continent. And it's actually a very, very ingredient once you start to scale up, because once you start to get to the point where you're creating multi-billion-dollar startups, you do need debt as part of the financing mix, because just pure equity ends up being quite dilutive for everybody involved. And so that's what gap I see could be filled. And we're doing some work within the IFC, although we've done a bunch of work around venture capital. We're having internal conversations, understanding, okay, how do we, in conjunction with other partners, try to start looking at other kind of financing tools within the entire ecosystem, because I do think there's a gap there.
Okay. Nitin, given your global expertise also in other markets, when it comes to financing or investors from foreign countries, from where do you currently see these investments coming into the African market when it comes to startups, entrepreneurship? Is it mainly the US or China, or are there other developments? And is there something Africa can learn from these regions, how to finance, how to scale and structure the growth of new ventures?
So, speaking about this purely from a venture capital perspective, I think, just based on observation, what's been happening over the last couple of years is that we're seeing a good mix of funding sources from further out west as well as further out east. We're also seeing nascent but growing angel investors set up right here within the continent, and I think that needs to continue to grow further. I think if you look at the entire sort of entire food chain of venture capital, I think that we need to have a stronger angel and early stage investor set up right here on the continent. But again, the challenge with that is you also need early stage investors who understand what it is like to invest in a startup, who understand how to be helpful to entrepreneurs and so on. But that's a journey that my observation has been that different hubs within the continent are well on the path of. So that's really exciting to see. I think to your point on other opportunities to learn from other parts of the world, I think as far as financing models are concerned, yes. The discipline around managing cap tables, yes, I think there are plenty of things to pick up from other parts of the world on that part of our ecosystem. Now, the reason I'm being very specific about that is I want to be careful to not to draw away from the fact that Africa will follow the same sort of innovation arc, if you will, as Europe or the US. That just won't happen, and it shouldn't. So that's why I just want to be very deliberate in drawing the distinction between. I think there's opportunities for us to learn on financing models. I think venture debt is a great example that Wale just talked about. But it's important to not ground ourselves in, hey, we're going to repeat what Silicon Valley has done in Lagos. That's just not going to work.
Thanks a lot for these insights. We already received a question from the audience, and to the audience, if there are more questions, you can submit your questions to mcg@maleki.de. And interestingly, the question was that we are already struggling with the digitalization here in Europe. So where is the difference, and what is Africa doing different to make it a success story and to also make it a growth engine? Maybe Jihan, if I can hand that over to you, that question.
Yeah, thanks. I think that's a really interesting question. I think the key thing is essentially looking at our own markets, our own demographics, our own people, and seeing how we can now leverage technology to make those systems more efficient. I think it would be definitely a big mistake to sort of try and mesh what other countries have done, other continents have done, what they've seen success in, and bring it here and try to make it work without having a broader understanding of the needs of the people here, because obviously that's very different. I think you'll see with an example like M-Pesa, it sort of was a big leapfrogging. People did not have a bank account, but at the same time, now they do, but it's not in the traditional sense. So I think the key thing that we're doing differently possibly in Africa is, trying to understand our demographics more and sort of build around that as opposed to the other way around. I think we're also skipping a whole phase that maybe Europe and other markets, more developed markets, have experienced because we're forced to. We're forced to sort of move faster now that things are developing a lot quicker. People are more connected. So I think it's definitely more about understanding what the people are looking for and what they need and sort of building around that as opposed to the other way around.
I fully agree on that statement. Nitin.
Yeah, I just wanted to jump in on the back of that. I think that's absolutely spot on. One of the things that one of the ways that I think about this is, if you think about disruption or innovation that we're seeing in the startup ecosystem anywhere in the world, it's if you think about it on a spectrum. On one end of the spectrum, you have disruption of existing industry. So you're disrupting some form of suboptimal function. That industry or that purpose is functional, but it is operating in a suboptimal fashion, and there's opportunity for disruption in that manner. And I think that speaks to a lot of the disruption that we've seen in the West, right? You have an existing banking ecosystem. Okay, you have a better way of doing things. You have physical retail, e-commerce comes in and disrupts something like that. But I think the opportunity and the reason the landscape here in Africa is so exciting at this point is because I think a lot of the innovation is, especially the successful innovation, is really at the other end of the spectrum, where there is a disruption of a lack of function, right? So, and I think that's one of the reasons that M-Pesa became successful ahead of mobile money working anywhere else in the world, maybe bar China, right? So, again, and I think that sort of speaks to what Jihan was also mentioning in terms of, when you have a large percentage of the population that doesn't have access to a bank account, right? There's a bigger opportunity for disruption of lack of function, right? And therefore, your sort of arc of adoption of new technologies is going to look very, very different from how it has looked in the past in Europe or in the US or elsewhere in the world. So I think there's an interesting sort of concept of whether you're disrupting suboptimal function or you're disrupting lack of function.
Yeah, the one thing I'll add on that, if I may, actually a very, very good question, and I think both Jihan and Nitin said it quite eloquently. I think the difference between Europe and Africa is that, even more other regions as well, but Africa in particular, is that we're not dealing with legacy issues because there's kind of a lack of an installed base. So there's a great opportunity to recreate or reimagine what the opportunity is. And that's why when Nitin mentioned that, yes, we might look at financing structure, but the arc of innovation in Africa is going to be totally different because we are working with a different kind of installed base. And when people use the word disruption, it comes from a more kind of Western view of disrupting the incumbency, right? But in Africa, we should really be talking more about creation. It's like if you're going to create a bank now, how would you reimagine what a bank looks like? If you're going to create retail, you don't have to follow what was done before. How would you use technology to reimagine what retail looks like? And Africa is kind of in a lucky perspective in that there's still a greenfield opportunity, and this technology advancement is becoming at a stage where they can be deployed quickly and efficiently. You know, we have cloud now, we have infrastructure, we have connectivity. Most of these things didn't exist before. So marrying the opportunity set, which is kind of greenfield, with the level of tech development where you can, create an AI or ML engine very, very quickly. You can only do that now, and you don't have to worry about an installed base that you have to recode. I was talking to a friend of mine in the US. We still use ACH, right? So I want to transfer money from my bank account to your bank account. It takes 3 days to clear. Like, while in Nigeria, if you can do it in like 5 seconds from bank account to bank account. And that's because when you're going to create an interchange, you cannot create it with Java instead of with COBOL, because Java is kind of the new language now and it's a lot more efficient. And that's why I think the opportunity set in Africa is actually quite exciting.
That's all very, very promising. And I mean, listening to the details, Karen, if you are disrupting currently a market, or you're building a market on the retailer side, do you see a potential for these kind of business models also to disrupt like the Western world, like Europe? I mean, once you're established, you are in your local market, is there a potential to also go overseas and be successful there?
So I'd say, just echoing what Jihan said earlier, it really depends on, as opposed to innovation for the sake of innovating, right? It really depends on meeting the needs of the users in whatever market that you're going into or you're entering. And something I was thinking about just listening to everyone else's response would be, if you're in a position or in a startup where you're offering a product that is a catalyst for growth using digital, and you have the ability to scale very quickly, then that makes it more important for us to build responsible technology, or to build responsibly, right? Because in this setting, you're almost changing the mindsets or the behaviors, or giving people new ways of doing things. And that comes with an added responsibility of being responsible in the way that you build, right? And being ethical and considering the ramifications in the long term as well, because you're setting the stage. So just coming back to your question, I think, it depends on what problem you're trying to solve with retail. I think retail is interesting because it's very fragmented, for lack of a better word. So there are many different problems to solve in retail. In Europe, I think obviously there's more product maturity because there are other things that retail depend on that work, such as transport and logistics. Whereas here, we're still struggling to fix those base platforms as well. So the nature of the product offering in Europe for retail would be much more different. You're probably looking at, more predictive ways to define what people are going to spend on, for instance. Whereas here in Nigeria, we're struggling with eliminating waste or trying to get products across in the quickest possible time. So then you can't be trying to solve the problem of prediction when you're this early stage. So yeah.
Yeah, makes also definitely sense to me. Nitin, one last question. The success of digitalization in Africa, is that partly also because of the lean infrastructure which is needed? So you need electricity, you need internet connection, but it's not asset heavy, so to say. And you need talent, which is, as we listened to you, which is there. Is that part of the success story when it comes to digital business models in Africa?
You know, when I moved here 2 years ago from Asia. I've spent most of my life and career based in Asia. When I first moved here, one of the biggest things that I was excited about moving to this part of the world is really the sheer scale of the opportunity, right? So 700 million people, that's a very large number, 700 million people have never experienced the internet. Right now, the question of what happens when this 700 million people gets onto the internet, what are they going to do? What kind of internet will they experience? What will they do with the internet? How will they create value with what they experience there? I think that's an extremely profound question. Now, there are a few things that need to be, I think, that we need to think about collectively, private sector, public sector, all parts of the ecosystem. The first question is, how do we solve the problem of access? Right? I think Wally touched upon this a short while ago. And access it's a multi-layered problem. Right from, like you said, access to electricity. Right? We know we have a huge electricity issue all over sub-Saharan Africa, especially. But beyond electricity, access to network. Sorry, can you still hear me? I just got disconnected.
Yes, go back.
Yeah, okay. This is not as big a problem as it was maybe a few years ago. So coverage of networks is the other one. The third piece within access is access to smartphones. Now we are seeing a growth in penetration of smartphones. More and more people have smartphones in their hands. But again, smartphones are still pretty expensive for a lot of people on the continent. So how do we start to solve some of those problems? And then finally, and very importantly, the cost of data. Data is prohibitively expensive in most parts of, especially sub-Saharan Africa. A gig of data in South Africa can cost me somewhere in the range of $6.50, whereas a gig of data in, let's say, in India, maybe other end of the spectrum, is about 25 cents, right? So big scale. Now, there are lots of underlying issues beneath that, but those need to be solved. So access is the sort of first piece. The second piece is, and we spent a bit of time on this, so I won't talk too much about this, is just the startup ecosystem. How do we feed the startup ecosystem, right? Which is, again, how do we have sensible regulation that governs various sectors when you look at the startup ecosystem? How do we potentially have harmonization of that regulation around the continent to enable faster scaling up? How do we have a smart environment which is conducive for investors? How do we help develop? How do we provide entrepreneurs the right kind of resources to help them scale up their businesses? Right. So the startup ecosystem is the second pillar of what I would consider as sort of a successful digitization plan. And the third pillar I talk about is just talent development. Right. It's a very sort of broad word. Like I said before, we have an existing base of talent, but how do we create depth now in that in that talent pool? And what's the role that the private sector plays in that? What's the role that the public sector plays in that? How do we go through that journey? So really, I think of these three as the key pillars that we need to pay particular attention to as we're thinking about digitization of Africa, because otherwise that can be a really big, far-reaching and fuzzy word, if you will.
Thanks a lot, Nitin, for these explanation. I think we only warmed up, so to say, around digitalization in Africa, but unfortunately we are also running out of time with that panel. Nevertheless, I would like to close that panel with a final round, because I mean, our topic, digitalization in Africa, the next growth engine, ? So maybe if I can get a quick and short statement from everybody, why digitalization in Africa is the next growth engine. Jihan, maybe starting with you quickly.
Yeah, I think we're definitely just getting started. I think there's a lot more to come, and I think we're seeing a lot of great infrastructure companies that will now help the next phase of growth across the continent. So I'm really excited to see that.
Thank you. Karen, over to you.
Yeah, so I think we're still very early stage across many industries. If we were to see the same kind of convergence that we've been seeing for fintech over the last couple of years around more spaces, then we could really leverage digitalization as a catalyst for growth in Africa.
Thank you. Nitin.
I think it's the only way to go. I mean, technology, I think, is going to be very central to solving some of the most profound problems that we see on the continent. So it's really, really central to where we need to go. So it's not like there's a choice.
Thanks a lot. Marle, over to you, and a big thank you from my side to you for putting together this brilliant panel. What is your view on the growth engine Africa?
Thanks for that, Christian. Really appreciate it. I think for me, I echo what everybody else has said, but I'll kind of end where I started. I think it's really around the entrepreneurs. I feel like in Africa today, all the talent and all the entrepreneurial skill set is focusing on digital. And when you have that many people and that much brain power and youth focused on something, I think it's definitely the growth engine for the continent.
Perfect. Thanks a lot to my panelists. That was a brilliant discussion. As I said, we only warmed up. As we are all digital natives, the audience can reach out to us. I think you will find us to continue that discussion. Thanks again to the Maleki Group and IFC for enabling this panel. Thanks again to the panelists and the audience. Goodbye. Have a great afternoon.
Thank you. Bye.
Hi, good afternoon, and thank you for joining the conversation on health in Africa for the Africa-Europe conference. My name is Evelyn Castle, and I will be the moderator this afternoon. First, I just wanted to thank the organizers for putting together this conversation. They have selected a great group of people to sit on the panel today. I also wanted to thank everybody for joining us. We're going to be doing like a Q&A style conversation, and we would love for all of you to also participate. The organizers have sent you instructions on how to ask questions. All you have to do is just send an email to mcg@maleki.de, and then they will send me your questions. So please feel free to do that. You know, we would love to take questions from the audience and have you all participate. So before I introduce the panel, I would like to just quickly introduce myself and to set the stage a little bit for the conversation that we're going to be having today around economic opportunities and challenges in the healthcare sector in Africa. So a quick introduction on myself. As I said, my name is Evelyn Castle. I am the executive director and co-founder of eHealth Africa, which is a Nigeria-based nonprofit organization that designs and implements digital health systems in West Africa. 3 years ago, we actually decided to enter the private healthcare market and founded EHA Clinics, which is a leading primary care provider in Nigeria. And currently, I'm in the process of launching a new initiative called EHA Impact Ventures, which is a philanthropic impact investing enterprise that supports early stage, high impact, female-owned SMEs in Africa. So after spending over a decade living and working in both the public and private sectors in West Africa, I can tell you that I have a very good, maybe even a too good, understanding of the challenges that companies face on a daily basis in implementing in West African countries. But, you know, obviously, as we all know, and the reason why we're sitting here is because with each challenge, there is an opportunity as well. And if we can overcome these challenges, there could be, you know, very lucrative opportunities for the healthcare market to flourish in Africa. So just to give some examples of how some of these like generally cited challenges about providing health services in Africa can be flipped, you know, really to an opportunity. So the first one is poverty. So poverty is generally cited as a huge challenge, which, you know, of course it is a huge challenge. We know that 35% of people living in Africa are living below the poverty line. And we know that the majority of spending on healthcare is out of pocket. But by 2030, you know, Africa will reduce the ranks of its extremely poor by 45 million, and relative poverty will decline by approximately 10%. So it's only going to be 24% of Africans living below the poverty line. So, you know, what does this mean for us? This means more people are going to have the funds to pay for medical care. Another big challenge is inadequate government spending on healthcare. So today, total spending on healthcare in Africa has remained at about 5 to 6% of GDP over the last 10 years, which might seem like not much progress has been made, but because the GDP has increased in most African countries, if you look at it on a per capita term, you know, total spending on healthcare has almost doubled over the last 10 years, from $150 per person to about $300 per person. So again, you know, there's more funds available from the private sector or from the public and also from the government side to pay for health services. Of course, I mean, there's numerous challenges regarding workforce and infrastructure issues, and I think that the panel is going to go into way more detail about what some of those challenges are. But again, just to say that, you know, with the money that's available through increased government spending and an increase in investment from GFIs, there are tons of opportunities for companies to support the development of the workforce and to build the necessary infrastructure. So with that little bit of background and perspective on kind of how the conversation is going to go today, I would now like to introduce you to our panel and to give them the opportunity to discuss in more detail what challenges they are facing on a day-to-day, how they are overcoming them, and then also, you know, what opportunities they see as well. So first up on our panel, we have Mr. Eric Osai. So Eric is joining us from Ghana today. Mr. Osai is a pharmacist by training and has spent his career contributing to the advancement of healthcare in Africa. He is a specialist in pharma, medical device, and in vitro diagnostic markets in sub-Saharan Africa. Mr. Osai is the managing director, head of West and Central Africa for Sysmex Limited. And Sysmex is a leader in the medical device industry and works on the development of innovative, original, and unique high-value added testing and diagnostic solutions. So Mr. Osai, if you want to just wave so people know which one you are. Thank you. Next up, we have Mr. Suleiman Sule joining us from Nigeria. Mr. Sule has 10 years of experience influencing and leading teams in matrix organizations. His main role includes managing operations, projects, and product marketing for growth and delivery of solutions across the private and public sector environments. Mr. Sule is the General Manager and Director of Pharmaceutical Services, Nigeria, for Field Intelligence. And Field Intelligence is a startup health supply chain technology company and is supporting pharmacies in Nigeria and Kenya. So Mr. Sule, if you want to also just wave so people know who you are too. Thank you. Next up, we have Mr. Fauzi Najjar. So Mr. Najjar is joining us. I believe he said, so normally he's based in Cape Town, but I believe he's calling in from Germany, if I'm right, today. Or sorry, he's based in Johannesburg, but calling in from Germany. And Mr. Najjar's background is in economic political science and regional studies on the Middle East. Mr. Najjar is the Regional Director of Germany Trade and Investment in Johannesburg, South Africa, and he has held this position for just under 3 years. The Germany Trade and Investment is the foreign trade and inward investment agency of the Federal Republic of Germany. GTAI's mission is to promote Germany as a location for industrial and technological investments and to identify investors for the German markets. So, Mr. Najjar, if you also want to just wave so people know who you are too. Great. And then last up is we have Dr. Nina Dudnik, who is joining us from the US this morning. Dr. Dudnik is a social entrepreneur, a science diplomacy advocate, and the founder and former CEO of Seeding Labs, which is a US-based nonprofit organization investing in building scientific capacity in the developing world. Over the last 15 years, Dr. Dudnik has supported companies and individuals in translating vision into social and business impact. Dr. Dudnik is the Director of Policy and Transaction Development of Millipore Sigma, which is the life science business of Merck, which I think we all know. So, and Nina, if you want to just give a wave as well. All right, so welcome to all of our panelists. Thanks for joining today. And like I said, this is just going to be, a general conversation. So feel free to jump in if you have something else that you want to add to the conversation. But to kick us off, let's start off the conversation about going into more detail about some of the challenges that companies face on the ground. So this is a question to Mr. Osai, Mr. Sule, and Dr. Dudnik. What is the biggest challenge that you or your company faces in providing your services to the African market? And if you can please explain the challenge and some of the solutions that you found to address it. So why don't we start with Mr. Osai from Sysmex?
Okay, thank you very much for the introduction. Good afternoon. I'm from Ghana, and hello wherever you are. For Sysmex in the healthcare testing space, I will say that we really see a lot of needs in the healthcare testing space, which you can also call challenges. And if I have a few listed challenges that we see in the healthcare testing space, which is quite, though we have many countries, this is quite common with most of the countries in Africa today in healthcare. And the first issue today is how do you get quality test results from all these new high-end technologies that are available and ensure public safety in Africa. The second point is for how do you make sure that you have these technologies near to the clinicians so that they can make fast clinical decisions to be able to save patients. The third challenge is the issue about knowledge, training, and capacity building. So you want to have local people, local staff who have the requisite knowledge and training to be able to provide or optimize these technologies. We also find these two needs, which are the advancements that people want to have the latest diagnostic tests. Of course, this awakening has come with the COVID pandemic, that people who would usually go to Europe or the US for medical testing could no longer travel and wanted to have certain diagnoses done, which requires advanced or latest diagnostic tests. And this is also a need now. Then the last one also is coming from the COVID pandemic, where you have lockdowns, you have staff working on the shifts, and now people or the healthcare testing market begins to recognize the need to move away from manual testing to automated testing. And the end result is to improve productivity and the outputs of the hospitals or the healthcare providers, and even their profitability. So for us at Sysmex, it's important that we try to see how we can address these needs and challenges. And if you look at the issue of quality testing, is in the advanced markets, you're looking at making critical decisions with these results in time. And in Africa, you also have to look at that side where you're talking about public safety. That will these results be able to ensure that you save lives? Because at the end of the day, as you said, if patients are paying from their pocket, then they can only afford what they are given. And if anything goes outside that, they can't. So the healthcare provider has to make sure that at least the patient is safe for a while. And in this regard, we have also deployed a lot of quality assurance systems to the end users to make sure that we have these reliable results. And this comes with also innovative financing models to make sure that healthcare providers, even to the district level, can have access to our technologies. In terms of knowledge and training and also education on the advanced latest diagnostic tests, we have established the Sysmex Academy in Ghana, which oversees most of our needs in West and Central Africa. We do the trainings both in English and French, and we have scheduled trainings for our distributor people, customers, to help them understand or have the knowledge on these advanced and latest diagnostics. And even in terms of IT support, do have a lot of training for them. I think the other challenge, which is also coming fast today, is the need for virtual trainings. So we are now on the way to prepare in terms of the skill of our people to administer virtual trainings, the necessary softwares, and today you want to have virtual equipment that you can train people with distance because you are limited in terms of movement because of the pandemic, but the hospitals have to function. So I think this is also very important. And then lastly is to talk about the whole digitization drive of the public sector, which is coming as a need from COVID-19. So we are also preparing ourselves to help the hospitals digitize the labs and be able to get the necessary information to function optimally when we have the next pandemic. Thank you very much.
Thanks for that. Yeah, I think that obviously with COVID over the last few years, we've seen the challenges in testing and the quality of testing here. Especially in Nigeria, there were tons of labs that popped up that I think the testing capacity was questionable, to say the least. So that is definitely a challenge that we see on the ground and agree with. Mr. Sule, I know that you probably are experiencing a lot of the similar challenges that Mr. Asai is. Do you have a specific challenge that you want to highlight? And also maybe if you could speak a little bit more on some of the solutions that you have for addressing those challenges as well.
Yeah, sure. Thank you very much, Evelyn. So on our side from shelf life, something we get to see a lot as a challenge in the market generally is the subject of the distribution channels being really fragmented. A typical neighborhood pharmacy, mid-size, would carry about 3,000 to 10,000 SKUs. Each of these representing unique treatment opportunities or products that the community gets to access through them. However, because the distribution system is generally chaotic, you have tons of distributors, suppliers that are providing these products to the pharmacy, and with these you get this sort of disruptions or volatility in product availability, because even the upstream, they don't know what products to stock, when to stock them, and in what quantity, and all of these does trickle down eventually. This is one challenge that we've been working to solve in a way that our providers are sort of insulated from this. Primarily being a tech company, we've been able to, through collecting data of what's being consumed where and when per time from over our current network of about 425 pharmacies, we are able to actually predict with algorithms to know when to procure what, when to put on what shelf, and that's one way that we have we're addressing that challenge there to make the process more efficient and a bit more predictable to ensure patients at the end of the day get the care they really trust these pharmacies and drug shops to access all the time. I would say a second challenge we sort of see in the market is clearly that one of finance or capital, so depending on what angle you're looking at it from. The community pharmacies, which we've just talked about, that are expected to stock these wide range of products, now have to constantly make these decisions about what to stock. So every time that decision is made, it's almost a treatment opportunity that's been denied to the customer who walks in. In strict business terms, then you'd say perhaps that's revenue loss to the provider. And that's something we are getting to see how we could almost like embed some form of financing in our model in providing these inventory to the pharmacies in a way that decision is sort of like eliminated there, and they can actually focus on pharmaceutical care, which is something they are trained for. I would say the last challenge basically would be, I think one of the jobs we have to do in this space is constant education. So you're educating the providers on different ways they could run their business to make care available. You're educating stakeholders with suppliers on how best to do things, how best to trust other methods of forecast and planning. You're also educating investors as well, but not a lot is really known about this space because you always have to come in and find out for yourself most times. So there's lots of education for the investors, the partners, and even the providers themselves. So this is something we, at Shelf Life, we get to do a lot. We've been very embedded in the community. So a lot of activities we do with the pharmacy groups. A lot we also do right now with engaging even younger groups. In Nigeria, for example, there's a group out of the Pharmaceutical Society of Nigeria called the Young Pharmacists Groups. These are people typically out of school within 5 years, under 35, that would make up the next group in the workforce there. So we're also constantly interacting with this group as well to increase the exposure to different ways of working and providing this service. So those are the three ones that we sort of are working around.
That's super interesting. And I mean, I think that the point around data is probably something that groups like, like Merck would be really interested in, having access to that information and knowing, what drugs are being used for, in what populations and, for what reasons is going to be really interesting to see how we can use that data in the future. So it's great that companies like yours are looking at collecting that in a way that can be usable. So Dr. Dudnik, I think going over to the same question for you, really what are some of the challenges that you're facing in providing your services to the African market, and what are some of the ways that you're looking to address those challenges?
Terrific, thanks. Because this often gets very complicated, there are two companies called Merck in the world. MilliporeSigma is the life science arm of the German group Merck, which does have a healthcare arm known as EMD Serono in some parts of the world. I work for the life science part of the business, and what we do is we provide an incredibly wide range of both tools and chemicals for researchers across, both academia to industrial to pharmaceutical, and we provide an enormous number of the tools and systems and consumables to pharmaceutical companies that produce vaccines and therapeutics. And so in providing all of these, I think some of the previous speakers touched on some of these things. Suleiman talked about distribution. Something equally glamorous that really hampers, doing business in Africa, I would say, is import-export regulations and customs regulations, as well as another really glamorous idea, which is procurement systems and policies. And so this is something that I dealt with quite a lot when I was the CEO of Seeding Labs. It's something that we deal with at Merck also. Being able to bring our products into the country, whatever country that may be. There's a patchwork of different regulations across the continent. And so, being able to work with governments on harmonizing these regulations so that you can, the documentation that's needed and how that's different for something that's a pharmaceutical product versus a laboratory chemical, right? They might have the same name, but they're very different and they have very different end uses. And being able to talk to regulators about, being able to get these products into the country with them sort of the greatest ease that it, to get it to the researchers who need it the most. Universities, for example, I'm very familiar with university procurement systems. They're very difficult and complicated. And these are connected to a global system of procurement that can be very complicated, stemming from multilateral bodies like the World Bank and filtering on down through to individual institutions at the ground level. And so, working with our customers directly to help them understand how to navigate their own systems, how to get exactly what they need and what they want, working with all of these, sort of public tender systems and things like that. It can get very, very complicated when ultimately at the end of the day, what we want is to be able to get scientists the tools they need to be able to do their work. And lastly, I'll touch on, something that's been articulated already very, very well, which is, having a trained workforce. We are working with a lot of pharmaceutical companies in Africa who want to enter the vaccine manufacturing space. For obvious reasons, this would be having an unbelievable impact on health across the continent, and is also something that is very new to most companies and most countries on the continent. And so how do you have, how do you build up the workforce that can do this kind of work on a day-to-day basis? And what I've seen is that oftentimes, whether it's a government entity from abroad or a private sector entity from abroad or locally, there's a disconnect with the education system, with specifically with the universities, and being able to make that connection back. It's a virtuous cycle ultimately, right? To have that training, you need the jobs. To have the jobs, you need the training. And so being able to get all of these parties playing together to be able to build that workforce, I think, is really critical.
Great, thank you for that. And thank you for that clarification. I think you touched on probably everybody's biggest headache of procurement. It is something that you learn to manage, but it never goes well. So yeah, I think we all have felt that pain at some point during our time working here. So, Mr. Najjar, I wanted to take the question over to you. You know, you're in a little bit of a different position than the other three panelists. You know, you support like established German companies who are trying to enter the African market. And so I wanted to ask you, you know, from your experience working with those companies, what are the biggest challenges that they come to you and ask for assistance on, you know, that they face on a daily basis? And how do you support those companies to overcome those types of challenges? I think Mr. Najjar, okay.
Can you hear me?
Yep, we can hear you.
Hello, good afternoon, everybody. Thank you very much for the invitation, Evelyn, and to the Maleki group. You're right. We're not only about. It's not only about, you know, attracting investment from the outside to Germany, but also what we are doing is we are very much involved in business intelligence, and by this we would support German business to enter the market. Your question about the challenges in Africa, first of all, we have to say that it's an extremely heterogeneous market. There is not one market, it's different markets. I've been working a lot for Southern Africa and for the Maghreb states, but if you would ask me about Nigeria, I couldn't tell you actually. What I'm seeing in general is that if we are talking about markets, sometimes it's easier to talk about market development. It's not always that you have a ring in which you climb in and compete with others and then see whether you get a market share. It's very often about developing, and it was said by the other speakers quite clearly for the health sector, but it's the same in other sectors as well. It's much about changing the parameters to enter and to be successful on the market. If you have done this, you can be very successful in Africa, that's sure. But this is a difficult task. And I would say that all of German business is prepared for that if it comes to Africa. You need a certain mindset to enter Africa. Generally speaking, there are, as I said at the beginning, it's very heterogeneous. So yes, that's now from my point of view. Africa is a continent with a lot of potential, with a lot of chances, but very often markets are still not existing. It is a lot of work to, you know, to change the things in the field. I can go further a little bit concerning the mindset that I think is important for German business. I believe there are a lot of German companies here. I think it's important for German business. No, let me put it that way. German business is very successful at exporting business. You have the backbone of the German economy is mid-sized business with very high technical standards, which means that this business has to look whether it is feasible for them to go to Africa at first place. If so, they should enter, in my opinion, as I said, developing a market that's not theorizing too much in their own land. They should go to whether it is feasible what they want to do. And it's also about keeping your authenticity. German business, a Bavarian company is a Bavarian company. You shouldn't change that. Contrary, you should stick to that. On the other hand, it also has a lot to do about not being dogmatic. It has to do about being more flexible if it comes to Africa. Yes. What else? Perhaps sometimes one should tell German business that they shouldn't try to save the world or Africa or so. Africa needs partners, and you can find that important partners, and this is quite important. It's always important to look for the business case itself, and then if there's benefits
report on that, do that, but not don't lose sight of the business case that you're looking for. That's also important, I would say.
Thanks for that. And I was actually find this really interesting. Mr. Osai, I don't know if you can provide any comments. Sysmex obviously is a multinational company. What Mr. Najjar was just saying was that, if a multinational company wants to come to Africa, that they might need to look at being a little bit more flexible in how they do their business model, or what some of maybe their procurement policies are or requirements are. And I know that you were part of the establishment of setting up Sysmex in West Africa. Do you have any comments on that, about some of the lessons learned in how companies need to be more flexible when they enter the Nigerian market?
Yeah, I think the issue with flexibility, it's always a question of whether first of all, the business is really meeting the needs of the people. I think that is the first issue. And the second point is whether the business is bringing advancement or progress to the people. And once you are able to settle on the needs of the people and what kind of progress or what kind of need you are meeting, then we try to operate more between our policy as a company, compliance with the global regulations, and also compliance with the respective local laws in the country. So it's very important that we, in as much as we want to be flexible, that we tried as Sysmex to be fully compliant with our internal processes and also with the local laws of the countries, because that is what can guarantee sustainability of the business. You don't want to be in Africa for a year or two and go walk away. Then you really have to do this to be able to have a sustainable business. I mean, as we get more, our democracies more set and settling down, the learnings and the experience is also causing a lot of restructuring in the government systems. And they also need us to help them understand how other countries have done it. So for example, if I meet the Minister of Health, he needs me to understand how healthcare testing can be introduced in a sustainable way in the country. Because there are so many things to be done in health in Africa. And it's up to us to identify the need, introduce the topic, but in as much as you want to be flexible, it's always good to stay within the compliance and also within the legal framework of the individual country. So that's the experience I would like to share from my side. Yeah.
Thank you for that. And I couldn't agree more, especially in how much the private sector really does support the government in setting up some of the understanding of how to work with the private sector, what pricing models to use, and what is reasonable. And, so I wanted to switch over, to Dr. Dudnik. From the scientific capacity side, you have spent many years advocating to build that capacity in developing countries. And so from your point of view, how is the lack of scientific capacity hindering the success of the healthcare sector in Africa? Whose responsibility is it to build that capacity, or who is building that capacity now? And, if we do it successfully, what kind of changes would we see in Africa in 20 years from now? Why should we care about this?
Sure. Well, I think that we are living through the midst of the best case possible for why this is important and why this is necessary and what it could look like. And I used to say that during the Ebola crisis, and COVID has made this even more explicit and even more urgent, right? When we were supporting our colleagues in West Africa through Ebola, one of the things we saw, for example, was that the Public Health Institute in Liberia collected patient samples, extracted the RNA, and then had to fly them here to Boston to have them sequenced. Right. And every day we have news of COVID variants circulating around the globe. That infrastructure to be able to do that in real time at the front lines of whatever country and whatever disease is emerging is really crucial. And what we failed to do between Ebola and now is build that infrastructure. It became obvious it was necessary then. We flew things in and then we flew them out again. And so what we have to do is build that kind of infrastructure sustainably and so that it remains and that it strengthens, because we don't know where the next. This pandemic is not over, and where it emerges, where it continues to flare up and change and mutate, we can't predict a priori. And so what we need are people with the greatest amount of training and the infrastructure to put that training to use everywhere on the front lines. We see the impact of this then, snowballs, right? Well-trained people want access to the best training, they want access to the best infrastructure. And what that often means is leaving their home countries to expatriate abroad. There's not a lot of great data actually collected on how many African scientists who leave for training abroad do or do not come home. But I conducted a survey several years ago on a group of women scientists who'd gone abroad to get their PhDs and postdocs and come back to their home countries. And 80 to 90% of them said they didn't have the funding or the infrastructure to continue the work they wanted to do. And so what this does, of course, is, right, you have this constant struggle to expand and increase the trained knowledge base of scientific and healthcare workers in the country, and the ability to train the next generation at home. And what I'm seeing today, as I alluded to, sort of working with local pharmaceutical companies, both in East, West, and North and South Africa, around building vaccine manufacturing capacity, is these are intricately tied. And the ability to not just take technology from abroad and manufacture it, but to be able to adapt it for domestic use, for domestic needs. There are obviously, there are diseases that are endemic to Africa, for which that are not a big focus of R&D for vaccines or therapeutics in the rest of the world. And the hope of being able to develop those therapeutics and those vaccines really rests on the local scientific workforce. And so these are all, the good news, I guess, is that it's everybody's responsibility, but everybody's opportunity also, to build this kind of system. And so it's obviously starts with governments at home in Africa, pledging to support both, increased capacity for the institutions like the universities, but also the private sector, right? We need, if you're going to manufacture vaccines in Ghana, the Ghanaian government and the ECOWAS governments have to be the first ones in line to pledge that they're going to purchase these vaccines. It takes donor country governments, Germany, the EU, the US, et cetera, being able to provide that kind of support, not in the form of aid, but in the form of investment and capacity building. I think these are really very important distinctions. It's too late when it comes as emergency aid. We got to build it in advance. And, all the sectors, the university sector, academic sector, the private sector, all of us have to work together to be able to build these things so that they are interconnected between the different sectors, between that pipeline between industry and academia gets built, and that pipeline between, African private sector and customers, both domestically across the continent and abroad. And I think that if we do that, we know exactly what it's going to look like. We watched the same trajectory happen across Asia. We're seeing it happening in parts of Latin America. We know exactly what it needs to look like and what it can look like if we make those investments.
I could not agree more with everything that you just said. And, it is really interesting, looking, and because I have a hard time also not comparing Ebola to COVID and how the different responses, happened. And, looking back at it, because so much of the response for Ebola was that emergency response, and they did build a lot of the capacity, but it wasn't integrated into the day-to-day runnings of those countries. And so when COVID hit, all the infrastructure that, we had spent years building was no longer there. And, they were really trying to build it up again in the middle of the response. But that being said, I do think that means that there's this huge opportunity for the private sector where it has to be done with the private sector so that when the emergencies do hit, the capacity is in country. And especially in Nigeria, we definitely saw that the private sector was able to respond and come up much more quickly for COVID testing and for the COVID response. So it's all trending in the right direction, but I think with the right investments and the right support, we could see some huge improvements much more quickly. So, everyone has already mentioned training and capacity building. And, obviously it's a huge challenge for startups and for companies that are looking to get into delivering services. But again, the opportunity behind it is just massive. So Mr. Sule, I wanted to start, with you. Field intelligence works, at a very grassroots level. And the labor force that you're working with has a very specific skill set that needs to be, improved. And you already mentioned that you're working with, I think you said, the young pharmacies group in Nigeria. So from your perspective, what opportunities do you see for job creation in your sector, and what are the areas that needs outside investment or actually internal investment to get us there?
Thank you very much, Evelyn. That's a really good question, which I think there are three different perspectives I could approach that from. The first part about job creation is I would look at, say, through our work with Shelf Life, for instance, we are essentially making the community pharmacy business model more viable by eliminating some of the risks, improving the processes there. By offering that as an intervention, we are ultimately enabling more pharmacies to come into the community pharmacy practice itself, thereby strengthening the human resource for health that's available at this level of providing primary care. The second bit to that would be typically we do the last mile delivery using a network of agents, which we call the fulfillment partners. Now, these are typically young Nigerians, usually educated to some level, university level, and have some familiarity with using technology. So we could imagine that investing in technology like what we do through the app, which they use in going to the pharmacies to make the count, we're essentially upskilling and empowering these users to do valuable work, do decent work. And these, I mean, we have about 50 of them across the country. So through these, we are providing them with decent work opportunities as an extension of the work we do with community pharmacies already. I think the last leg to this would be healthcare community pharmacies. I think piggybacking off what Mr. Osei mentioned earlier, talking about that connection between the universities, the training. I would say retail community pharmacy, first of all, is healthcare, and secondly, it is retail business in itself. And we find out that most of the pharmacies are usually stronger on the pharmaceutical care service delivery side of things. However, by what we do, offering them affordable, inclusive financing and the rest, we're able to sort of unlock the potential in that workforce to be able to do more. And if you're able to manage your business better, you're able to create opportunities. There's that multiplier effect that happens, and then ultimately being able to meet the health needs of the community. So those are like the sort of three ways we, at the very grassroots, are helping to empower the workforce and create opportunities for a very healthy population in general.
That's super exciting. And can you say how many pharmacies are you guys supporting in Nigeria now?
In Nigeria, we are supporting over 300 and something. Yeah, somewhere in that region in Nigeria alone.
That's great. Yeah, I mean, I think job creation is, one of the most impactful things that we can do. And so, I mean, the scale that you guys can impact is just, enormous. So that's super exciting.
Thank you.
So, Mr. Osai, I wanted to go and kind of ask you the same question as well. You also mentioned that that you guys have the SysMex Academy that you put a big emphasis on for training. What opportunities do you see for job creation in your sector, and what do we need to invest in to prepare the workforce for that?
Yeah, thank you. I think that also going back to Nina's comments on the collaboration between the universities and also the private sector, I think this is mainly what we are trying to do now, because it's very important that the university cost structure does not really change much. But what we can do as private industry is to introduce to the university what are our needs in terms of people and human resource, and why we think we need them. Because if you take a training of a healthcare person, it's between the Ministry of Education, the Ministry of Health, and you also have the Ministry of Environment, Science and Technology. So all these people have to be aligned in terms of people that we develop. And what I see all the time is some private sector people complaining about the candidates they have and whether they have the requisite skill. But globally, 60% of what you do today is something you learned on the job, not from a first degree. So the programs to set up people who come out of school in terms of training, we do have these in the academy, what we call our internship program for biomedical engineers, for example. We have also done partnerships with other German healthcare companies, with 2 universities, one in Senegal and one in Kenya, on training biomedical engineers, where we engage the department and the faculty to introduce these practical courses to the program. Hopefully next year we have the first batch coming out. And we also want to extend this kind of collaboration with the university in Ghana, specifically in Kumasi, to be able to influence the course content to meet our needs. But on a much more, on the macro level, the biggest challenge we have is the discussion that takes place between the donor supporters, i.e. IMF, World Bank, or governments, or G8, and the public sector, where the private sector is not involved anywhere until you get to a tender level. And at this point, the private sector can only provide very little input to ensure sustainability. So I give you an example. If the World Bank is discussing providing enough oxygen in healthcare facilities for countries, and this discussion is between government and the World Bank, and they come out with a plan and a document, and then now the supplier, the generator of the oxygen, sees this plan, and it doesn't fit to any oxygen generator, then what are we going to do? We just try to fit in. And I think this is the biggest challenge in terms of coming into Africa. And this is where we need to really focus from where we sit. If we can have that advantage of being in that triage between the financiers, the government, and the private sector, then we can propose even much more smarter solutions at a lower cost and more sustainable way. And this we did in Burkina Faso, for example, where we had a full discussion with the ministry to equip all the public labs, about 112, with our analyzers on a cost per test basis. And this has been sustainable in the first 3 years. And the contract is actually renewed for another 3 years. And this kind of collaboration is what I will also encourage companies that are coming into Africa to look into with government and the donors, to be able, because our proposals are that we are coming in as experts and we know what has worked somewhere and what hasn't worked and what will fit Africa. So that's my contribution on this. Thank you.
I hope government officials and DFIs are listening to what you just said, because that would make a huge difference in making all of our work way easier. Could not agree with you more. So I think we're just at the last question for the day, and we did get a question from some of the participants. And I think actually, Dr. Dudnik, this is probably a question over to you. So, and I think actually this relates back to what Mr. Osai was really talking about when it comes to the capacity building and you know, how we evaluate what groups are ready for different interventions. But the question from the audience is, how do you evaluate the capacities of African countries to produce and they want to know specifically for the vaccine against COVID-19. You know, what skill sets are necessary? Do you have any insight into how those decisions are being made?
Sure. I think it's really challenging. And on the plus side, it's been an unbelievable turnabout. I mean, I used to talk to people about manufacturing therapeutics in Africa 5-10 years ago, and it was not even a topic people wanted to broach. And there's enormous momentum right now among really everybody, the private sector, the public sector, DFIs, governments, philanthropists, everybody. The question is how to do it and whether everybody is coordinating. And I think that that's where the danger is going to potentially break down if it's not well coordinated amongst all of these many players. And determining who's got the capacity to do it is one of the potential areas where that's really, really critical. You know, I think this is where, you know, to Eric's point about involving the private sector is really critical. You know, from Merck's perspective, for example, we've worked with all of the major multinational pharmaceutical companies for decades. We work with emerging biotech and pharmaceutical companies all the time, all over the world. And so knowing kind of what is the skill set, what's the infrastructure, you know, what's the basic set of capacities that you need to be able to set this kind of manufacturing up is something that our folks internally deal with all the time. And, you know, and bumping up against sort of, you know, which local partners have the ear of government or which local partners get there first, you know, and sometimes, you know, these decisions are not always made in a very objective way. I think this is where it's really, really important for everybody to collaborate in terms of figuring out, you know, where is the best capacity. And also, you know, there's a lot of different plans circulating around building capacity in all of the regions of Africa. You know, a bunch of different plans are out there around networks of hub and spoke models and things like that. We need to build the right amount of capacity in Africa for vaccine manufacturing, because we also don't want to build, you know, vaccine manufacturing facilities that then don't have a market and become unsustainable, become sort of these white elephant projects, because that's the worst case scenario, is that 10 years from now, people look at me and go, yeah, we tried to build vaccine capacity and it didn't work, but it didn't work for the wrong reasons, right? And so I think what I am really hopeful is that, you know, the WHO and other entities will be able to coordinate all of this goodwill and momentum to be able to build capacity in the right places at the right scale to meet the needs of Africa, and then hopefully to be able to scale beyond. You know, we're talking about not just making COVID vaccines, but making routine childhood immunizations and things like that, because that is an ever-present market, and that's how these facilities are going to be sustainable.
Exactly. And with that business model in mind, you know, of course we shouldn't be investing in, you know, in manufacturing plants if we don't have a market that can keep this sustainable. So I think back to Mr. Osai's point of including the private sector in these conversations so that we are, you know, putting them in the right locations, building the supply chain markets around them so that they can be successful, you know, looking at warehousing, cold chain. I mean, there's so much behind it to really make this work. And so, you know, making sure that everybody's sitting around the table so that these investments make a difference and have the impact that we're looking for is so crucial. So wonderful. I wanted to say a huge thank you again to the panelists. This has been a wonderful conversation. Thank you also again to the organizers for having us. And at this point, I would like to hand it over to Dr. Maleki for the closing remarks for today. Thank you.
Well, thank you very much. What an interesting panel. I really enjoy it. And I also do hope that we have chosen the right topics for you. We heard a lot of optimistic aspects on Africa, and we're inviting you all to join us to the second part tomorrow at 9 p.m. One more time, I would like to thank all the speakers, moderators, and supporters of this conference, and especially from my team, Mrs. Ricarda Böhm. See you tomorrow, hopefully, and bye-bye, and have a nice evening.